Hello everybody, this is Tortoise Investing coming at you today with why Mastercard and Visa are dividend powerhouses. We're going to be taking a look into these two moat company compounding just behemoths. Now, before we do that, if you're new, join the 552 that have already done so. Hit that subscribe button. It is super free to do. Hit that like button. Makes the YouTube algorithm happy. I do buy and hold forever videos on REITs, ETFs, stocks, and more. I do these weekly, do 3 videos a week. So join me on this journey of hitting 1,000 subs, then 10,000, 100,000. My ultimate goal is to one day have a YouTube plaque. Help me get there. Let's grow our portfolios and the channel together. Now, without further ado, let's take a look at Mastercard and Visa. I love these. I own both of these. Both of these companies make up about 20% of my portfolio, and I'm looking to add on any and all dip opportunities. Now let's see why. None of this financial advice, just entertainment and educational purposes only. Always look into things and do your own research before buying. Mastercard adjusted free cash flow yield of 2.61%. Dividend yield not that high. Neither of these are all that high, but they are growers. 0.57% payout ratio, 20.6%. Revenue over the last 10 years grown at a rate of 11.64%. Very nice. This is just up and to the right. The same thing, you're going to see it with the free cash flow. Free cash flow at a rate of 13.97%. Very nice. I love companies that have growing free cash flow. EPS, pretty much same story at a rate of 16.65% over the last 10 years. This is just up and to the right yet again. They have some debt at $13.75 billion. Their EBITDA is $13.39 billion. So their debt is no issue whatsoever. They've even got some cash on hand at $7.41 billion. So my rule of thumb when I personally look at companies, I don't like them to hold more than 3 times their EBITDA in debt. Because if they were needing to pay that debt down or something, if they have the EBITDA for it, they're good to go. 3 times, more than 3 times the debt it's a little bit of a red flag for me. That's my personal preference. That's what I look at. Next up, the dividend. This just looks like a set of stairs. Just up, 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 up. Over the last 10 years, increase in rate of 25.25%. Excuse me, sir. This is awesome. This is literally just compounding at its finest. This company makes so much free cash flow that they don't know what to do with it. They're already the moat company when it comes to like payment things. As Mastercard and Visa are both in this same area. So what do? They dump all their free cash flow into dividend and doing some share buybacks, which I love. You really want your companies to do that. If they're not doing acquisitions, do those two things. So we take a look here over the last 10 years, been buying back shares at a rate of 2.56%. Very nice. Yet again, that's what I love my companies to do. You're making a lot of money, return it back to the shareholders in the form of dividends and buybacks. Very nice. So Mastercard's been increasing their dividend over the last 11 years, and I see them doing this for the foreseeable future. They're increasing it at the rate that they're increasing it at, and it's still just at 20.6%. That is beautiful. Next up, Visa. It's going to be pretty much the same story. Almost same thing going on here. Adjusted free cash flow yield of 4.55%. We got a dividend yield of 7.74%, a little bit higher. Payout ratio 22.8%. Revenue increasing at a rate of 10.89% over the last 10 years. Again, just up and to the right. Free cash flow, same story, 14.46% over the last 10 years, just up and to the right. EPS 28.73% over the last 10 years. This is just bonkers to me. Their debt, they have $20.2 billion in debt. Their EBITDA is $20.5 billion, so their EBITDA is higher than what their debt is, and even in that case, Their cash on hand's $18.52 billion. So if they really wanted to, they could just pay off all their debt and not worry about it. Dividend, very similar story to Mastercard. Over the last 10 years, increasing at a rate of 18.49%. Again, this just looks like a set of stairs. And the same as Mastercard as well. They are buying back shares over the last 10 years at a rate of 5.74%. That is amazing. That is awesome. One thing I didn't think, did it load over here? No, the return on capital employed is not loading. There we go. This is for Mastercard. I went back because I just realized it wasn't loading a while ago. The return on capital employed, 2020, 37%, 2021, 41%, 2022, 49.9%, pretty much 50% return on capital employed. That's ridiculous. That's amazing. Usually I look for companies, I want this to be in the realm of 15 plus. You giving me something that's as strong as this for return on capital of 50%. I'm about it all day. Visa, very high as well in 2020, 21%, 2021, 23.5%, 2022, 29%. So it's also incredibly high. You could literally cut these, both of their return on capitals in half. It'd still be amazing. Absolutely awesome. Visa's been increasing their dividend for the last 14 years. Again, it's just the same story with Visa and Mastercard's very similar stories. Increasing revenues, increasing free cash flows, low dividend payout ratios, growing EPS, low debt to cash ratio, growing dividend at like 16% plus. Payout ratios are high. Shares outstanding are decreasing. Like, I love these companies. Now let's take a look. This is the drip calculator. As you can see here, just dividendchannel.com. This will show us since 2008. We're going to take a look at the return average for Visa and Mastercard. And if you take a look right here, Visa average annual total return since 2008, 21.07%. Ridiculous. And let's take a look at Mastercard's. Boop. Nope. I typed in AM. I don't know what AM is. That didn't look too good. Mastercard. There we go. 21.20%. Actually, I can go ahead and just put the V in here, click other, and have these side by side for us. As you can see, very similar returns. Average annual return for Visa 21.07, Mastercard's 21.74. So this is if you were to do a $10,000 investment back in 2008, what your total returns would be, and that's just that's compounding at its finest. I love it. Now let's just let's compare it to the S&P 500 over that same time. S&P 500's been returning since 2008. Average annual return of 10.31%. So these are both more than double beating the market since 2008. As always, past returns are not a guarantee for future ones, but I hold a pretty big position in both Mastercard and Visa, and again, any and all dip opportunities, I'm going to be snagging up some more of it because I love how these companies operate. Pretty much everyone in the world's got a Visa card or a Mastercard on them. Like if you have a bank account, you probably get a Visa card. Like the moat is just astounding when it comes to these two companies. But yeah, a little deep dive into those two dividend powerhouses. I hope that you enjoyed that. As always, make sure to hit that like and subscribe button, drop a comment down below, and until next time, see yous.